For you I bleed myself dry. All the things that you do.
Thank you, Chris, or Coldplay. Some of you are probably thinking, I know why they picked that song, because Coldplay played it on the weekend, and actually that was my footage at the start from the seats that Stuart McDonald and myself are very fortunate enough to have at that great concert. Yes, for the RIU Resurgence, we thought Coldplay's song would be somewhat applicable, given probably 130,000 people, and many of you may have gone to those two great concerts. But the other reason we picked that song is, what's the theme of the day? Uranium. And what colour is uranium? Yellow. So we thought that'd be a great way to start the RIU Resurgence Conference. And the RIU Resurgence Conference, as some of you may be aware, is the last conference for vertical events in RIU this year. And it's been a great year. It's been huge for lots of different companies. Obviously the lithium and the copper and the nickel and gold, and now uranium. And it's just so good to have so many familiar faces from the uranium industry who are back at a vertical events conference. Because many of you may not be aware, but between 2004, George Bork will be aware, he's sitting there, he definitely knows this, 2004 to 2011, Stewie had the Australian Uranium Conference. And by 2010, that conference was the biggest conference in the Southern Hemisphere. Around March 2011 wasn't a good day for uranium, but so many of the representatives that are presenting later on today from that industry, they deserve a lot of credit because they stayed. They went the distance. They understand the importance that uranium can play in this industry, in decarbonisation, reducing climate emissions. And I'm really looking forward to hearing from so many. I think we've got 13 or 14 uranium companies that are presenting today, so it's great to have them. I also want to make a special mention to the companies presenting in the first session today and the 3 sessions tomorrow. I get the fact that as it gets to the end of the year, sometimes the interest and appetite from certain companies to participate starts to cause them maybe to second guess themselves. So Stewie and the VE RIU team are very appreciative of the support that we've got from the companies that have signed up to this conference, and we're really looking forward to their presentations. Now, a conference like this wouldn't exist without our sponsors, and the main sponsor, and Dave Franklyn will be on the stage very shortly, Argonaut. They're great partners of ours. They support Stewie and his conference in Singapore, the Future Facing Commodities Conference. They're part of us at our New World Metals Roadshow that goes from Perth to Melbourne and Sydney, and they've been a great supporter of the RIU Good Oil and also the RIU Resurgence. So we're very appreciative of this great support we get from Argonaut. SGS, thanks to the team at SGS. Vance and Mark, great supporters of this conference, and I'm sure a lot of you put your assays through SGS at some stage. Sequent, they're back again this year. They've been supporting us. They're also exhibiting at RIU Explorers, so very appreciative of their support. TerraSearch, another one that's coming up to about their third year of sponsoring the RIU Resurgence Conference. And Mets, have a look at your lanyards. They're our lanyard sponsor. And then there's the Lin Partners. They've been partners with Vertical Events and RIU at all our conferences for the last 10 years. They're all our media partners. Chapter 1, I can see Jed at the back, he's live streaming this. We've got a huge audience right across the East Coast that are streaming as we speak, so big shout out to those guys, and thanks to all our media partners, and then other supporters. And I'm just going to close with, again, saying thanks to everyone. It has been a pretty big year. Up until this moment, not including this conference, Chrissy has been with us the whole way, so we're very lucky, but she has introduced over 300 presenters this year at an RIU or Vertical Events conference, and it doesn't include this show. So she's done an outstanding job, so very appreciative. We know that she'll finish strong at our final conference. Big shout out to Shane and James and Jed up the back. If Chrissy's calling out 300 presenters, they're putting 300 presentations up on the slide. So we're very lucky to have outstanding work by those guys, and it doesn't matter whether we're doing a conference here, Fremantle, Sydney, Melbourne, Gold Coast, those guys always do an outstanding job. And then there's our team. Obviously, we're led by the best in Stuart McDonald. Very fortunate to have him. And I'm lucky to have my wife, Charm, involved. She's been with us now for over a year. She does an outstanding job. We've got Andrea, who also has been with the team for well over 10 years. And this year, just recently in the last couple of months, we brought on a new staff member. Some of you would know well because she's been in the resources industry forever, and that's Diane. And she's doing a great job. So thank you to everyone, particularly to our team, and we look forward to a good couple of days, don't we, Chrissy?
Thanks so much, Jaxon. I really enjoy being part of these conferences, and I thought, geez, is it really 300? I remember in Sydney this year, we were absolutely going through the opportunities for all of you. And I know that a lot of you come around to different conferences with us. I was having a chat with Tom this morning when he came in. He's coming over to Singapore, and I know I see a lot of your faces over in Singapore next year. We'll be heading there on the 28th of March. I don't know about a lot of you, but I got up this morning, checked the weather, 40 degrees, thought, thank goodness I'm coming in here, I'm not staying out there. We're talking about risk management a little earlier on, saying, this year I actually invested, and I've been sitting there for 5 years now, I invested in a new air conditioning. So I'm sitting there today feeling very smug about myself, because when I go home I'm going to use the app and I'm going to turn it on. When I'm going to get home I'm going to have the perfect temperature. And so it's interesting, isn't it? You go for ages thinking, oh, should I invest in that or shouldn't I? Should I invest in that or shouldn't I? And then you get the right information and you do the right thing and it just changes your world. And we've got some amazing people that are going to speak to us today, which are going to give us some really good advice, which I know you'll take on board and utilise that to your benefit. So what have I got today? I've got an extra 25 companies for your consideration. And Jaxon mentioned that we have got a lot of discussion about uranium. And when I was going through my scrolling this morning before I got out of bed, and I was looking at the news sites and of course looking at resources, and uranium, there's a shortfall now. The prices are going up, record high. So I know my first speaker is going to have a lot to talk about, so I'm going to get him up here without further ado because it is still a fairly jam-packed program. He's got 20 minutes. Everyone else, if you're listening in the room, you've got 15. For those of you who haven't met me before, I'm known as Madam Lash. So with 2 minutes to go, I will ring the bell twice. I will stand up at 1 minute and then I will go as close as possible to you without actually appearing in our live stream over there. And those of you who haven't met me either, you think she's a bit strange. She doesn't clap straight away when they finish. And I do that so Shane and our team at the back can get a really nice clean cut of the wonderful words coming out of people like David's mouths, and we can do all that nice and clearly. But I need you to clap as soon as he's finished. Can you do that for me, team? A little bit of positive interaction. Oh, that's very good. I've never had that before. I'm very, very impressed. All right, let's talk about this man who's going to lead our conversation this morning. As Jaxon alluded to, he's part of the team at Argonaut, who are our gold sponsors for 2023. He's a regular of the conferences with us. He's branched out into podcasts recently. You can read his insights across multiple business platforms, news outlets. He's the individual they turn to. And in a way, I was thinking to myself, he's a bit like the Eddie Maguire of the investment world. He's everywhere and he knows everything. And today we're lucky enough to have him here with us. I am, of course, talking about David Franklyn. He is title co-head of Argonaut Funds Management and fund manager of Argonaut Natural Resources Fund. And today his presentation is titled, "The World is a Dangerous Place." Let's find out more. Please make him welcome, everyone.
Thank you, and thank you to Chrissy and the RIU team. I mean, Argonaut, on behalf of Argonaut, we're very proud to be the major sponsor, and we've got a long relationship with the group and really like what they do. I'll just the title of the presentation today is "The World is a Dangerous Place," and I think we're all aware of that. So what I thought I'd do is touch on a few of those key themes, and then really from an investing perspective, and then focus on sort of how we try and manage those risks. I won't go through the disclaimers. They're for you to read later if you so wish. A bit about Argonaut first. So what's unique about Argonaut is it's all about resources. It's an organisation of 55 people, totally focused on the resource sector. A corporate advisory business, a stockbroking business, a research team, and the funds management business. I'm co-head of funds management, and my colleague Ben Clifford is the other co-head. I run the Natural Resources Fund, he runs the Gold Fund, and we kind of support each other on each. Look, we're pretty proud of what we've been able to achieve in the first few years of the fund. As you can see, the Natural Resources Fund's been going since January 2020. We're up 198% in that time. We're up 27% last year. We're up about 9% in the 12 months to the end of October. But as you'd all be aware, the last 6 months in particular has been pretty tough. And what happens in tough markets is people look for security. And so the gold fund, which we launched in November, about a year ago, has done very well. That's up 23% and being well managed by Ben. Okay, so the world is a dangerous place. When you look across what's happening, the first point is there's an era of escalating geopolitical risk. We're seeing it everywhere. Russia invading Ukraine, the situation in Gaza, but even just general tensions in a large part of the world, and I'll touch on that. Financial risk can't be ignored. The level of debt at a time when interest rates are rising is cause for concern. Climate risk, it just gets, it seems to me as the economy's slowed down, people are kind of going, yeah, I'm just not so concerned about, energy transition. There's more important things. But this is a theme that's not going away. The world is going to continue to warm, and it's an existential threat for the globe. So as a theme, it's going to be there for a long time. And then, everyone sitting here and watching here you're here because you're investing in small resources, and that is also a dangerous place to be. But why you're here is that where there's risk, there's opportunity. And I think we're all enthused by the opportunities that all these threats create. So firstly, an era of heightened geopolitical risk. And I'll run through these pretty quickly. There's quite a few slides, so bear with me. So first one is, the world is really polarising between democracies and autocracies. And probably more so than that, the autocracies are getting more autocratic and the democracies are getting less democratic. And I think depending on what happens in the US next year, that with, potentially Trump coming back, that might accelerate. So 45% of the world live in some type of democracy, 37% under authoritarian rule. And what that's meaning is really a redefining of supply chains. So if you're a country or a company, who do you want to deal with? Who do you want to buy from? Who do you want to sell to? And I think that's really a theme that that we're going to see in the resource sector for a long period of time. If you look at what's happening in China, China is the go-to when you're investing in resources, because typically over the last 20 years, it's been the purchaser of something like 50% of most of the major commodities and dominates a number of them. I think what's fascinating is President Xi kind of locked himself in for life, and now what he's trying to do is transition the economy from how it used to grow, which was very orientated around property and investment, funded by debt, to a consumer-driven economy. Now, the risk and the concern that he has is that after locking down his population for 2 years and then destructing their wealth by crashing the property sector, the consumers aren't really that excited about spending money, and they're more looking at saving. So the question is how you stimulate the economy if you're not going to stimulate property. And I think that's really what they're toying with. They've done a few stimulus packages, haven't really had a big impact. And if you look here, you can see the property sector over the last couple of years, and apologies, it's a very complicated slide, but you can see the red line, which is property sales in 2023 are lagging well behind. I think what you're going to see is you're going to have to see some kind of reversal there and stimulus probably after the Chinese New Year next year. The US, different but the same, right? So a frightening picture, really. It makes me feel very young when I look at these two guys. I've probably got another 30 years in the industry, which is good. So an election next year, is this the best we can do? I think Trump coming in would create a lot of chaos, but probably positive for the markets, better or worse. The other big aspect of the US is their commitment to climate change through the Inflation Reduction Act, investing a whole lot of money, $520 million Australian, to accelerate the transition to net zero, and to really, again, focus on spending money in those areas and with those partners where they see a long-term future. More immediate, you've got inflation very high, interest rates ratcheting up to deal with that, and trying to manage a soft economic landing, which is difficult, but not impossible. As you increase interest rates, asset prices fall. And we've seen that a lot in the investing markets over the last 6 months or so. And don't forget, US is a critical player in what's happening globally on the security side. So when there's a conflict, the US are there, and that's also critical. European Union, I think it shocked everyone when Russia invaded Ukraine, and I think what it highlighted is, who can you trust and who do you want to partner with? And to buy or to basically source the vast majority of your oil and gas from Russia seemed like a good idea at the time, but now it's not such a great idea. And I think it highlights that theme that you need to be careful who you're dealing with. Africa, moving around the world a bit. So Africa, huge resource base, copper, lithium, nickel, gold, a whole lot of commodities, but a lot of instability. I think since 2020, you've had 9 coups in Gabon and Nigeria, Guinea, Sudan, Burkina Faso, Mali. Mali's had 2 in 4 or 5 years. And then other countries which haven't had coups, but still reasons for concern. So Chad, DRC, Ethiopia, and you guys would be familiar with some of the company situations there, where AVZ had its foot on what is probably the biggest and the best lithium deposit on the planet, and suddenly that's been taken away from them, or it looks like it'll be taken away from them. And Leo Lithium project in Mali, progressing well, but I think the Mali government, after a coup, stepping back and saying, well, maybe we want a bigger cut of this. There's opportunities, but there's also risks in these kind of areas. South America, it's a similar kind of story. Major producer of lithium, of copper, but what you've seen over a long period of time is countries that probably haven't treated their people that well. There's been corruption. Mining companies made a lot of money, but it hasn't flowed through to the communities. And there's a high level of social dissatisfaction and unrest. So you can see that in Chile, largest copper producer, when they go through approaching elections, there's a lot of talk around royalties and regulations, and that creates risk and uncertainty for the investors. Codelco, which is a major government copper company, is now moving into lithium, and a lot of uncertainty about what that means for existing lithium players. Peru's had 6 presidents in the last 5 years, second largest copper producer in the world, but mining investment is dropping off just because of what's going on there. Panama, you may well have seen recently, it looks like they're going to stop First Quantum's Cobra Panama mine, again, due to not taking full responsibility for the communities in which they operate, concerns over water, but also heading into an election. It's very topical for them. Argentina just voted in a new 35-year-old president in November. He's the son of one of the wealthiest people in the country. But Argentina, 40% of the population are in poverty, inflation 140%. Brazil, by contrast, looks reasonably stable. Bolsonaro, who was a bit wild, is gone. Lula da Silva, who's an ex-president, has come back in. They're pro-mining and things are moving forward. So when you bring that back to commodities, you say, well, really what I want to do is I want to invest in areas, commodities and locations that are pretty safe. But when you look across the commodity spectrum, particularly energy transition type commodities like copper, nickel, cobalt, lithium, graphite, and rare earths, and you go, well, where are most of these commodities produced, and then where are they processed? The challenge we have as investors is a lot of the areas they're produced in is not really where we want to be investing in, and similarly with processing, and particularly some commodities like rare earths and graphite, which are dominated by China. It makes it problematic because where you've got production and processing dominated by China, you've also got the risk of some price manipulation, which I think we've seen in both those commodities. So it makes it difficult. As an investor, what we're trying to do is we're trying to find copper or commodity producers in countries which we're happy to invest in, which kind of narrows the field. And similarly with processing, you want those commodities to be able to be processed outside of China. So geopolitical risk, the logic is in times of uncertainty, you buy gold. And that's really been the case. As I mentioned before, the gold fund is up 23% in the last year. That's on the back of gold prices edging higher. And what is an environment where interest rates have been going up, which typically you wouldn't expect it to go well. And it's all about central bank buying. Jewelry demand, sort of retail demand out of China and India has been solid. The fear trade, so ETF money flowing in when something comes and goes. So when you had COVID, a bit of money flew in. When you had a bit of a banking threat in the US, money flowed in. But I think for the last 6 quarters, money has flowed out. It's all about central bank buying. And it's those countries that are saying, look, I don't really want to hold US dollars. So it's China and it's Russia and it's Turkey and it's Uzbekistan, those kind of countries. So a sign of the times. So that's that geopolitical risk. Moving on to financial risk. Look, this is the US. The US in 2008 had about 10 trillion in debt. It's now got over 30 trillion. So all of you have had mortgages the last thing you want when you've got a lot of debt is interest rates to go up, and that's exactly what's happened. So that's certainly going to have an impact on the US and the US consumer. Typically, their home loans are locked in for a long period of time, so there is some protection there. But the impact on asset prices is worth bearing in mind. And you can see the US debt to GDP ratio over 100% is also getting up to pretty extreme levels, particularly when you've got interest rates high. So that has implications about what happens with the economies going forward. To put that in context, this is sort of a global map of debt to GDP. You can see the dark green is 100% or more. And what really strikes me about this is just what an outlier the US is, right? And given its position as the major economy in the world, that is pretty remarkable. What's different between the US and Japan is Japan are going, we got shitloads of debt, but what we're going to do is keep interest rates low, whereas the US hasn't gone down that path because they're trying to deal with inflation. So we'll see how that all comes through. And finally, this chart just highlights that when you increase interest rates, the risk of financial stress is significant, and often signs like the SFB and Credit Suisse issues in the first half of 23 really highlight that if you put that pressure on the economy, then you can create longer term issues. So moving to the third risk I wanted to talk about, which is climate risk and implementing the energy transition. And I think you would have seen a lot of these charts, and I'm sure you'll see a lot more over the next couple of days. The chart on the left here really shows this is kind of a consolidation of total mineral demand for clean energy technologies by scenario. And what it's showing is, depending on what scenario, there's a massive demand for commodities for energy transition to take off. And you can see in 2020, going to 2040, under stated policy scenario, so that is kind of everything that has been committed to, you've got roughly a doubling in commodity demand. But to go to net zero by 2050, you're going to need a 6 times uplift in the production of commodities. And we're seeing that. If you look at the donut over here, what this is showing is, and maybe just focus on copper, but what it says is, here's the number of copper projects that have been announced, and copper is really fundamental to energy transition. And here's the lag. So we need to have done all these to be on track for net zero, we're lagging behind already. So I think the issue with energy transition is it's happening, but it's happening a bit slower than it needs to. The big win in energy transition, and I guess the one area everyone will be familiar with is electric vehicle penetration, which has gone very well. So I think in 2020, there was about 6.6 million vehicles sold. I think in 2023, that's up around 14. And generally, people are looking at something around 40 million vehicle sales by 2030. So expanding very rapidly, which is good. China's been the leader there. EU's come on board, and the USA with the IRA has also got behind it. But the big issue with energy transition is really what's happening at the power sector and power generation. What you can see here is transport's important, but you still, if you switch to an EV, you're using less oil and gas and that, well, oil and diesel, etc. But you still got to plug it in, and that power's got to come from somewhere. And so I think the next big thing is how you address baseload power, because without addressing that, you're really skirting around the issues. If you look at, and this kind of puts it into context. So if you look at 2022, black sort of, the black piece of the pie is non-fossil fuel energy sources, and it's taken from that table alongside. So wind, solar, hydropower, bioenergy, geothermal, nuclear, in 2022, notwithstanding a whole lot of work on energy transition, 20% of total production. By 2030, expected to be 25%. By 2040, 38%. By 2050, 52%. So it's a long, hard road, and we're still not really making the dent that we need to make. And I think that is the opportunity for uranium. So I think all of us are keen to hear today from the uranium companies, because it's carbon-free, it's known, it's been proven safe, and we think there's a real opportunity there. Final point on energy transition is what's really exciting as investor is there's a whole new wave of demand coming for a small group of commodities. Copper, lithium, nickel, cobalt, rare earths, uranium. And that's where we sort of orientate our portfolio, because that's a thematic that's going to be in place for the next 10 to 20 years. So from an investing perspective, a couple of things I would highlight. So what we try and do is we focus on tier one locations where we can. So ideally Australia and North America, but if we can't, we can't. We back the resilient themes, so look for increased geopolitical risk, financial risk and energy transition, and how we can benefit from those. We focus on the commodities that will benefit most. So we look for areas where there's strong demand growth, but constrained supply. More specifically, gold, oil and gas in particular on geopolitical risk. On financial risk, I think gold and both the performance of gold in the last year would reflect that. And energy transition, we like copper, lithium, rare earths and uranium. And finally, a checklist. So when you're investing in small resources, you're at the pointy end. And often an investment in a small resource company is a bigger commitment than in a big company because of liquidity. So what we're looking for is established mining province, significant scale assets, a mainstream commodity, competent management, external validation. So someone else has said, look, I've looked at this, it looks good. Attractive relative valuations. Net cash, you want to have at least a year's cash, ideally more. Key customers outside China, and doing the right thing from an ESG perspective. So that's all for me. Thank you and enjoy the conference.
Thank you very, very much. I was listening, I was thinking, thank God I didn't get a copy of this presentation, or I might not have got out of bed this morning. I was like, negative. What have we had, about slide 22 and 3 minutes to go? We came in with a positive. We talked about the baseload. The guys who are doing uranium in the room would go, right, he's backed us now, we're looking good. There's the opportunity. And then I've got my checklist. So you went to 21 minutes. I was feeling very hopeful and more positive about today. Would you please thank David, everyone? Fantastic presentation, sir. Really insightful. Yeah, and if you're going to have all those slides up on Argonaut's web, you will. So if you want it. Great. So if you didn't get that, if you go and see the team at the booth, they'll have a copy and they can connect you. But always check out our YouTube page as well. Right, now this fellow who's coming up first to do a company presentation for us, interesting fella. Well, hold on a second. You want to have a chat, do you? I know, Alex, I know you really, really well, but you know who I've got on my list. So let me just go across here because I've obviously done something incorrectly. I have. All right, I can tell you about this fella here. We're going to talk lithium first up. So Alex Hanley is the CEO of Lithium Universe. Do not let the boyish good charms and looks take you asunder. This fellow knows he's got an incredible background. He's got a resume a mile long. I'm not going to go into it. But when you hear about the lithium universe that we're about to go into and the potential, use your checklist and see if this is one that's going to tick your boxes for your investment portfolio. Please make Alex very welcome, everyone.
Thanks, Chrissy. After a 10-year hiatus, a new lithium company emerges from the galaxy. Introducing Lithium Universe Ltd, committed to building a lithium future. Now, if it sounds like universe, well, you're right. Iggy Tan is back. Iggy started his time back in 1995, having commissioned the lithium carbonate plant for Greenbushes before moving on to spearhead Galaxy Resources, It took that company from what was a $10 million market cap to about $2.5 billion at merger with Orocobre. Now, Allkem as we know it today. During his time at Galaxy, he was first responsible for envisaging and delivering the first large-scale, vertically integrated mine-to-refinery project, including the Mount Cattlin project here in WA and the Jiangsu lithium carbonate plant in China. Mount Cattlin itself, it's a 1 million tonne per annum mining operation, leading through a 4-stage crushing circuit onto DMS, producing about 140,000 tonne of spodumene con per annum. That was then shipped to Jiangsu lithium carbonate plant in China. When Jiangsu was built, it was the biggest plant in China and remains today as a benchmark for process technology and process control, producing about 17,000 tonne per annum and above nameplate today. Allkem continue to operate the Mount Cattlin project here on the left, and Tianqi now own and operate the Jiangsu lithium carbonate plant. Yeah, sure. How's that? Better? The main point to draw your attention to here, everyone, is probably the last dot point. The price of both spodumene concentrate and the price of lithium carbonate was about 10% of what it is today. So not only the ability to execute, but also the ability to execute in difficult financial conditions. Also joining us on the board is Pat Scallon. Pat ran Greenbushes for 25 years. He brings a very, very focused skill set, having expanded that plant from what was 200,000 tonne per annum to about 1.4 million tonne during his tenure. So why are we focused on Canada? Talking a little bit more broadly, Australia produced about 300,000 tonne of LCE in 2022, and really has over the last couple of decades cemented itself as a backbone to the Chinese lithium-ion battery chain. Now, in comparison, Canada is considered to be just as fertile as the early stages of the WA lithium industry. So now we're seeing an influx of lithium expertise and subsequent development expertise now coming into the country. And as Mr. Lithium Joe Lowry says, Canada wants to be the backbone to the North American lithium industry. A few words from Iggy Tan. So lithium projects are taking too long to come online in order to meet future demand. There are many lithium explorers, but not many actually have the expertise to execute projects. We're not here to explore for exploration's sake. We're here to build a project as quick as we can. The Apollo project for us is situated within James Bay, 240 square kilometres, and when it was first staked in early 2022, it was staked in between two up-and-coming juniors, still finding their feet in the market and on the ground. These two juniors are, of course, Patriot and Winsome Resources with their Adina project. We're in a 30-kilometre radius of both these projects. We're in the same greenstone belt, and these are becoming household names with lithium investors. Talking a little bit more broadly about why we like the Apollo project and why we like the James Bay region. Now, in the top right-hand corner here, we've done an international survey and developed a yardstick on what constitutes a good hit. 10 metres at 1.1 is a good hit, and 30 metres at 1.3% is traditionally a good hit. Now, what we're seeing at Patriot, we're seeing 156 metres at 2%. Down at Winsome Resources Adina, 107 metres at 1.34%. So using our yardstick, these are good, not neither good nor excellent, they're quite simply exceptional. And not only are they high grade and thick mineralisation, but also close to surface. So exploration on our Apollo licence continues. We've done an airborne magnetic survey, microgravity, and a full suite of very thorough rock chip sampling. What we're seeing within the region, talking a little bit more typically about the mineralisation style, is also the coarse spodumene component. We're seeing coarse spodumene at Allkem, at the James Bay deposit. We're seeing coarse spodumene also within the Patriot and Winsome Resources projects. Now, what that means is, from a processing perspective, it just has to go through a 4-stage crushing circuit rather than a ball mill, and then goes through a DMS rather than a flotation circuit, reducing initial capex and ongoing opex. Most importantly, this is the same type of project that Iggy built with Mount Cattlin. This is the 1992 Dream Team. Anyone can name a player? MJ, Pippin? Well, we've assembled the Lithium Dream Team. Obviously Iggy Tan, Pat Scallon, but also notably Jingwan Liu. Jingwan, he's considered to be an international downstream expert in lithium hydroxide and lithium carbonate. He was instrumental in the commissioning and operation of the Jiangsu plant, and still consults, a specialist consultant to many of the conglomerates we hear about today. Terry Stark, left-hand side, accountable for the James Bay acquisition, which is now held by Allchem, and the operation of Mount Cattlin. And John Loxton on the right-hand side commissioned the Jiangsu plant when he was with Hatch. Down the bottom, Roger Pova, he's run both Greenbushes and Mount Cattlin from an operation and maintenance perspective. Hoi Nguyen designed and constructed Mount Cattlin. And then John Sobleski, who was with Galaxy during this time of huge growth. Talking a little bit more broadly about the company's strategy. Now, typically it takes about 8 to 10 years from maiden resource all the way through to first construction. Now, when Iggy built the Mount Cattlin project, he did it in under 3 years. Skipped scoping, skipped PFS and went straight to DFS. At the time, a capital cost of under $90 million US. Talking downstream now, Kiwanana, obviously by Tianqi, has been over the news here in WA. It's been plagued with issues, obviously. It's about 100% over schedule, 100% over budget. It continues to struggle to get up to that full design rate. We've seen the same thing in North America. North America Lithium, now owned by Sayona, and also the Maska plant with the Wabuchi mine have been plagued with issues, and the province and the federation is quite scarred by both these failed projects. Now, when Iggy and the team built Jiangsu, they did it in 25 months, from groundbreaking through to steady state production, including 6 months of commissioning. At the time, a capital cost of 120 million US. So why have these projects failed? Well, it boils down to one thing, and that's experience. Experience in operation, maintenance, and that's what we folded into our design and why we brought the Dream Team in such an early stage of the project. Geopolitically, it's quite interesting, and David pointed to a few of these things in his presentation. In early 2022, the government ordered Cinnamine, a Chinese-owned company, to divest from Power Metals Corp in Ontario, and not only divest, but also relinquish the spodumene offtake. So this heralded a new moment, a strategic review, they called it, but definitely a step towards deglobalization and I think redefining the supply chain, I think you said, David. Now, what this means is it's not just words, it's actions, and it's heralded a lot of these companies, these junior explorers, to now look downstream a lot sooner, because that solution isn't offshore at China. So it's forcing downstream solution a lot sooner. So there's three main challenges in Canada. No production, obviously. We've got the government downstream requirement, and overall a lack of processing expertise. We're just rolling out the Quebec Lithium Processing Hub strategy. And no surprises here. It's what Iggy did back with Galaxy. It's a mine to battery grade lithium strategy, encompassing the same type of 1 million tonne per annum concentrator and 16,000 tonne per annum refinery. Now, the concentrator itself, it probably looks like a 5-year run of mine offtake with partnering with junior mines, similar to a hub and spoke strategy, similar to the early stages and continue to be within the gold industry today. Now, this not only brings cash flow forward for junior miners, but also provides the region an economic advantage to get going with the lithium production. After the 5-year run of mine offtake agreement, if there's life of mine after they've continued developing the resource, we would look to build concentrators on the mine after that 5-year as part of a JV agreement. Now going then downstream, we're building a refinery. So it's all obviously similar to the Jiangsu lithium carbonate plant that that Iggy has a design for, and it's aligned with all the critical mineral strategies, both provincially and federally in Canada and Quebec. Now, we've got two other elements. We've talked about exploration. Now we've got the engineering study. We've engaged Primero. They've partnered up with us to deliver a multi-purpose standalone and centralised concentrator design based on the Mount Cattlin design, winterising it for the Quebec environment, and also bringing it up to today's pricing. Primero don't need any introduction in today's audience. They've obviously done a lot of work with Bald Hill, Covalent, and also work in James Bay with Allchem. Now, this is the flow sheet. The main differences from the Mount Cattlin to this flow sheet is we're going to put in a small flotation circuit in the back end just to pick up any fines that may come in with the different ore types that we receive. Then looking to the next step, the third business unit for us is the Quebec Lithium Processing Hub engineering study. So this refinery itself, we've partnered up with Hatch. Now Hatch, as I said before, they were instrumental in the delivery of the Jiangsu plant, and we're grabbing the Jiangsu design, we're putting it, we're winterizing it, and we're bringing it up to international standards in Quebec. Bringing it to today's prices, and we should have something, a DFS level of study by the end of next year. Now, we've already published the flow sheet, which is pretty bold, and I'll say, you know, true Iggy Tan style. It's exactly the same as the Jiangsu plant. So we already know the flow sheet, and we're progressing quite rapidly through that DFS. Now, talking a bit more broadly about Quebec, I mean, the James Bay region is quite well known these days, and what we're seeing is a huge lithium supply and potential built up there. There's about 50 explorers currently focused on lithium exploration in Quebec and James Bay. So we're seeing this huge supply on the and then on the north, so I suppose the eastern side of North America, we've got about 50 new gigafactories and battery manufacturers coming online by the end of 2029. So we've got huge supply. We've got a very, let's say, hungry battery manufacturing industry, and currently no refineries. So we're going downstream first. We're building downstream first and then going upstream. So we're talking to many juniors, and we're currently, well, we've just completed the location study for the refinery itself. We've looked at 4 locations, the best from all the way from the northern Quebec to Abitibi, down towards the Montreal metropolitan area and onto Saguenay. Now, our preferred location is in the Montreal metropolitan area, a place called Bécancour. It ticks all the boxes, quite frankly. Utilities, we've got everything from natural gas through to hydropower. From a logistics perspective, we've got port, we've got highway, we've got rail infrastructure. Why we focus on lithium carbonate versus hydroxide quickly? Well, we've got very proven experience in lithium carbonate, so we're not trying to reinvent the wheel here. And we actually, secondly, we see a push towards carbonate. Obviously, there's been a trend over the last couple of years towards hydroxide, but with the introduction of LFP batteries with Volkswagen and Tesla, we see a market share going in the favour of lithium carbonate. In terms of a merchant standalone lithium refinery, we don't need to look very far to find the margins that are coming out of these merchant refineries. Tianqi, the Jiangsu plant, you can see here the gross margins across 2021 and 2022. So we've got the Apollo Lithium project, we've got the Lithium Dream Team, and finally the Processing Hub strategy. So please join us on our mission to the universe.
Well done, Mr. Hanley. Thank you so much. And Joe Lowry, if you follow Joe Lowry at all, he's adamant. One of the first things on his investment checklist for a company is check out the team leading it, make sure they have the experience. And there really is a dream team involved in I was going to go to, you know where I'm going to. Excuse me, everyone, but my brain has just taken a small hiatus. I'm so used to saying galaxy because I'm watching Iggy sitting here next to you.
Lithium Universe.
That's correct, you're right. You know, sometimes you get up in the morning and think my brain has just gone a little bit too slow. I should have been down at the coffee machine with all of you. We're going to stay with lithium for our next investment opportunity. And the fellow that's coming up to speak to you right now, he's very passionate about what his company is doing. He's always one of the first people in the room out the back, so it's quite fitting that he's one of the first people to speak to us today, so he doesn't have to wait to the end to share his passion with you all. So this is the MD and the CEO of Infinity Lithium, Ryan Parkin. He's a dedicated footy dad, and I suppose you can use that footy analogy. He believes that his company is kicking goals with the project that they have got. So it's the San Jose Lithium Project in Spain. It's a fully integrated project. It combines a 1.6 million tonne resource. Well, that may have increased recently, but he'll tell you more about that, with the production of nearly 20,000 tonnes of battery-grade chemicals on site to the burgeoning European EV market. It's all about location. Would you please make Ryan very welcome?
Great. Well, look, thanks again for the kind introduction, Chrissy, as always, and thanks to Jaxon, Charm and the team for the opportunity to be here today. I mean, obviously, Dave's, the world is a very dangerous place. It's entirely pertinent for where we sit. Some of the geopolitical tensions, the issues in and around global versus localised supply chains, but also ensuring that your project is aligned to the local community. This is where we have seen some of the greatest gains in our project over the last 12 and 18 months. Just quickly on the introduction, I am a very keen footy dad, but we've actually increased our production from 20,000 tonnes to 33,000 tonnes per annum. So we'll be sure to update our bio for the next time around. If you might take note, please, of the disclaimer here. I mean, this is available on our last corporate presentation last week and also on our website if you'd like to read this any further. So my name is Ryan Parkin, Managing Director and CEO of Infinity Lithium. And what we are doing is we are progressing the development of the fully integrated San Jose Lithium project. So this will be using one of Europe's largest lithium resources on site as a feedstock for a purpose-built plant. So this is a long-life plant that is fully integrated within the region of Extremadura to produce battery-grade lithium hydroxide. The resource itself was drilled in 2017. It remains open at strike and depth. We executed a land deal earlier this year that highlights a 35-year period for a 26-year life of mine project, but also importantly, an opportunity to extend that a further 26 years. So we see enormous potential with our existing resource. And from a corporate perspective, we hold 75% of the project and a call option to move to 100% at any time prior to the final investment decision. Before we move on to our more recent advancements and milestones, just quickly, we're a company with 460 million shares on issue, a market cap of about 56 million, and a little more than 11 million in the bank at the end of the last quarter. Our board is led by a non-executive director, Adrian Bias, extremely experienced in the junior space. Ramon Jimenez is our in-country CEO, the ex-CEO of Acciona Industrial and Management, a huge company with more than 30,000 people under his management and very experienced in bringing large-scale projects to fruition. And also just to note, John Starink, who works with Dave Marie, a part of our technical advisory committee. This team has been working tirelessly for 2 years to seek opportunities for lower grade materials to be processed. We've vastly improved the front end of our process that has seen very significant improvements in recoveries and change of project economics and whole dynamic in and around the project. So more recently, over the last 10 days, we've had a number of very interesting developments as seen through our announcements on the ASX. Firstly, we updated our scoping study that saw a significant increase in production, some 33,000 tonnes per annum from where we were previously at close to 20,000 tonnes per annum. So some very robust project economics for a project with a very low carbon footprint. Again, very little transport when you're processing your feedstock on site in a market that's entirely relevant, striving for the lowest carbon footprint vehicle within that European market. On Saturday morning, we woke to the news that the Spanish government had decided to grant us 18.8 million euros or 31 million Australian dollars under what's known as PERTE VEC 2, the process. There was some 528 million allocated, 200 million allocated to Envision, who are 100 kilometres from us and building a large-scale lithium-ion battery plant. The other big benefactors in this process were the major automakers, so SEAT, who's a subsidiary of Volkswagen. We had Ford there as well, and we've got Stellantis. So we're actually the 6th largest recipient of grant funding, the largest in the lithium space, the lithium chemical space, which has been identified in the last couple of presentations, quite rightly, as really being the major risk area for Europe as we move forward into production of electric vehicles and building a lithium-ion battery value chain. And also mid last week, we received a favourable urban compatibility report from City Hall, the local city council. This is the one permit or endorsement we need at the local level. Everything else, our exploitation concession application or mining licence, goes through at the regional level. So we've highlighted this project is not incompatible with the locality of Caceres, and underground mining is an opportunity for the region. This slide's probably a little bit busy for days like today. Just some outcomes of our updated study. The back end of our study, our processing is done at a greater confidence level than PFS, and at the front end, our drilling is defined this study to be of scoping study level. But ultimately, with the increases in production and a very low C1 cost at less than $5,800 a tonne, those high operating margins are driving this potential to drive forward a very large-scale project on the footstep of Europe and able to service that huge European market. We've also adapted the front end of the process, so we're going to achieve greater than 90% lithium recoveries from run of mine to end product. And this has also been able to utilise co-energy generation. We're able to recycle steam and other energy inputs to ensure the most efficient use of energy inputs at that plant. And most importantly, coming back to Dave's commentary in and around some of that geopolitical risk in Europe, the availability of gas is a major consideration, and we've actually managed to pivot our project now aligned entirely to the use of electricity and ultimately with huge photovoltaic installations in the regions where we're located in Extremadura in Spain. Just finally on the scoping study, before we dive into some numbers, we engaged Minviro to undertake a full LCA analysis for us, not just scope 1 and 2, but all the way through scope 3, a very low carbon footprint, and again, entirely relevant for the European market for consumers that are seeking to minimise that CO2 footprint of the end vehicles. So the study we released highlighted we'll be processing close to 2 million tonnes per annum at full production of ROM over 26 years to produce 33,000 tonnes per annum. So more than 70% increase from where we were previously. So based on 100% project ownership, you see an NPV pre-tax of close to $4.1 billion US dollars, post-tax of close to $2.9 billion US dollars. Again, we have 75% of the project and can move to 100% at any time prior to the final investment decision. A very robust IRR, ungeared, obviously very significant margins there, and some pricing assumptions moving forward. There'll always be debate. We're at a lower end of the pricing cycle where we sit at the moment on some of those spot markets, but still well north of $25,000 a tonne. So this is a long life project with a payback period that we believe will be accelerated, far more than that 4.2 years you see there today. So in terms of the simplification of the process and the process units, this has really been brought about with lower residence times and eliminating key process steps. So we take our run-of-mine material, we undertake a revised leaching process, we eliminate that beneficiation, that calcination and roasting process. Then after we produce that lithium sulfate in solution, it's very much a standardised process, the back end, pretty much off the shelf is what you get with Viole or others, as we step through that neutralisation, evaporation and crystallisation to produce a battery-grade lithium hydroxide for what we believe would be relevant for the European market, as it's highly aligned to high nickel content cathodes. The resource itself, the feedstock, 111 million tonnes at 1,000 parts per million cut-off. We revisited that when we moved the project underground, so at a higher confidence level, 2,500 parts per million cut-off, close to 65 million tonnes. So 1.6 million tonnes LCE, an incredibly relevant resource for Europe. It's a large homogeneous ore body, and we've seen intercepts as high as 1% lithium oxide at 192 metres. So a very significant feedstock to have on site. But again, just to labour the point, we're not looking to export a concentrate. There is mica concentrate markets now available in the Chinese market, but this is about the geopolitical alignment of this project to consumers within Europe. As we look forward now to our underground mine plan, this is in direct response to the local community. We work closely in collaboration with government and with major stakeholders. You can see the portal there, which is donated there to the right of that first image. Is meant to be adjacent or in close proximity to that industrial processing plant. So this is a resource that was mined in the 60s and the 70s. When you walk the ground, you can see the shafts of the dilapidated buildings. We'll be using long hole open stoping, which is ideal for a large homogeneous ore body. And from an environmental and social perspective, the ability to return the vast majority of waste product back underground by way of paste infill was a major benefit for the community and also for our environmental credentials in that key European market. This slide highlights a little bit more that process. We'll just fly through this, but really to note, we undertake probably about 48 million tonnes over the life of the project raw movement, or 2 million tonnes per annum at full production. We undertake our primary crushing underground. We then move that above ground and really take that run-of-mine material and move that into our pressure leaching circuit. We're able to co-generate energy. We're able to produce our own reagents as part of that and use other green energies aligned to our electrical consumption to produce close to 33,000 tonnes. This is an aerial overview of the plant. Very significant operation. It must be enclosed within the European Union, or particularly within Spain, where we are located, the large processing plant. So this is ultimately the cost of your social licence and the cost of doing business and being able to produce battery-grade lithium products within the European Union. There's going to be competition globally for key resources, critical raw materials. There's a global race, but most importantly for downstream lithium chemical processing, and there's no tonnage currently produced in the European Union. So the benefits that are aligned to ESG, to the local community and environmental, I think we've touched on a few of them already and looking pretty short on time, but ultimately this is what's driving the decisions within Europe. We are making these concessions and driving the greenest possible project, a financially viable project, but also a socially responsible project that is in line with the local community and facilitates a permitting pathway forward. Our LCA analysis, you can see on the left-hand side there, we're at the very lowest end globally, but in particular with reference to other hard rock. This is advantageous on a global scale, but again, we are just entirely focused on the European market, and the European consumers will be very aware of your CO2 footprint and ultimately how those credentials feed into that value chain under a battery passport. Our permitting and land progression over the year has really been the major focus of the company up until this most recent technical delivery of the updated scoping study. We're applied and awarded an exploration permit, which is denoted by this large brown rectangle you see on screen. And ultimately, we're using that right of tenure to move forward and lodge our exploitation concession or mining licence application by the end of the year. We've collaborated closely with government through what is known as an EIA scoping document to help identify the environmental credentials that must be submitted as part of this process. We acquired and secured land, which I touched on towards the start of the project, which is aligned to that lithium chemical conversion facility. So it's already been allocated an industrial zoned classification. And most importantly, last week, we received this urban compatibility report that paves the pathway forward now to lodge our final mining licence application and also for our submission of a premier application, which is to be recognised as a project of regional and general interest for the region of Extremadura. So under that premier application there, if we can start on the right-hand side, this is going to provide an accelerated permitting pathway and very much the same, methodology or mindset as what Europe is trying to achieve. The Extremaduran regional government is also seeking to capture all of that downstream activity, make sure they retain the benefits, the value capture, and also that benefit to the local community with more jobs, more commerce, but also to attract other industry to the region. We've seen at a national level the award of 18.8 million euros, and we believe that is just the start. PERTE 3 has been announced for Q1 next year. That's another 1.2 billion euros from Spanish coffers aligned to projects of critical importance. And we believe we've got a strong case to tap in again and see what might be made available for critical raw material projects in Spain. And finally, as we move forward with the Critical Raw Materials Act, some very lofty targets established at the European level. This is pushed through the European Parliament and the European Council late last week, but we're going to see ultimately 350 billion euros allocated to critical raw materials projects and net zero industry projects, really in direct response to the success of the Inflation Reduction Act in the US. We've seen significant pools of funds and resources aligned to that market. It's a thematic that we all understand well, and ultimately we'll be seeking to craft our own space out in Europe. And just probably just to finish off on this, I can see Chrissy there, but why Spain? Ultimately, it's a huge automotive industry and sector within Europe. It's the second largest. It speaks for 10% of its GDP and 18% of its exports. So why San Jose? Why lithium in Spain? This is a huge end market within the European Union. It's built on a house of cards with huge investment downstream in lithium-ion battery development, and ultimately we're here with one of the premier projects in Europe to supply battery-grade lithium chemicals. All right, thanks a lot. Enjoy the rest of the conference.
Well done, Ryan. Now, I may have had a little yawn that it certainly wasn't about the passion of your presentation. Is anyone else feeling a bit chilly, or is it just me and I need to go and put some clothes on? No, good. There are a couple of us. I did see Jeffrey's got shorts on, so we're not going to ask him for his opinion, but there's a couple of us are more conservatively dressed, and I'm still cold, so I'll go and fix that up in a second. Now, when I was reading up the bio for our next presenter, it's pretty impressive. It's pretty full on. He's been part of the teams who've driven a number of significant projects. I want you to think there's Newcrest, Evolution, Equigold, and Santana, I think as well was the other one. Now he's with Great Western Exploration. So as we all know, I didn't go to the coffee this morning. That wasn't a great choice, but it was because as I went down, I saw him at his booth on the left. So I beelined across there, had a bit of a chat with him, and I asked him what was it about GWE's prospects that got him to sign on and be part of the team. At that point, I should have got the coffee because it was quite a big story and I was there for a little while, but a really, really interesting one. So you've got a passionate geologist here. So what do you dangle in front of a passionate geologist to get him across the line? They dangled 5,000 square kilometres of fertile ground. So now it's his job to explain to us why we should invest as he did with his career. Would you please make Shane Pike very welcome?
Thank you, Chrissy. That's a wonderful introduction, and thanks for RIU to allow us to tell the Great Western story. A bit of a summary here. The board and management here will, these names will be known to many of those in the Perth business community. Kevin Soames is our non-executive chairman. He's a 50-year veteran of the industry, a chartered accountant. Myself, as Chrissy said, I'm managing director, geologist with over 20 years experience. Ross Williams, he was one of the co-founders of Mako and was recently involved in the acquisition of Mako by Thiess. Greg and Warburton, well known in investment circles in Perth. He was formerly the largest shareholder of Hartley's, and he's a corporate mergers and acquisition specialist. And Tony Walsh is our company secretary. He was ex-listing manager for the ASX here in Perth, involved in the Atlas listing, and also involved in the acquisition of Cirrus by IGO. We've got a small number of shares on issue, relatively, 250 million shares. As of the end of the September quarter, we had 2 million in cash, and our market cap is just over 10 million. All right, why should Great Western be on the shopping list for all investors? Three main things that I want to get through here. As Chrissy said, we've got a very large ground holding in Western Australia, over 5,000 square k's, where we're completing greenfields exploration in known mineral districts. We've got some really highly prospective drilling targets that we are drilling or just about to drill. Yesterday we announced we commenced drilling at Firebird, but also we've got Oval South at a Year North project, DeGrussa style copper targets at Fairburn, and Archean greenstone gold results that we got from the Barwidgee fault there, which I'll talk to a little bit later. Number three is our discovery strategy. We have really good we're technically disciplined. All our targets we put through quite a bit of scientific rigor. Despite the rumours, ore deposits aren't formed by magic. There is actually some science you can put behind these things, and to increase your chances of discovery success. We've got really low corporate overheads. We're really invested in making discovery. Greater than 70% of our funds go into the ground. We don't pay our non-executive directors any fees for their services, and there's probably only a handful of those listed on the ASX that can lay claim to that. And we've got really supportive major shareholders and cornerstone shareholders. And with our small amount of shares on issue, we're leveraged to exploration success. Okay, Year at North, we're looking for a real giant there in the Oval and Oval South targets, looking for Winu style intrusive related copper targets. Firebird project, as I said, we have just started drilling on this. We announced this yesterday, following up on some significant results from some our RC drilling program. Our Fairburn project, large DeGrussa style copper targets. We've got 3 EM conductors there that we're chasing up on. And last week we recorded significant high-grade results from our Barwidgee fault, where we completed a proof of concept drilling program. All right, so first up, we'll go in a bit more depth with this Oval South at Yerrada North. With any ore deposit, there's usually greater than three ingredients that makes it what it is. And what we're looking for here, and what we think we've got, is a potential for a colossal size discovery to be made. We're looking for a Winu. So those that don't know, Rio Tinto's Winu, 7 million tonnes of copper. 3 million tonnes of copper, 7 million ounces of gold, giant deposit, and that's what we think we may have here. The ingredients we have, and I'll go into this, why this is of interest, is coincident gravity and electromagnetic anomalism. It's located on a major crustal tapping structure, the Ida fault in blue there. Which, yeah, this blue here, Oval South, Oval there. We've got a nearby deep magnetic anomaly, which we think is a buried intrusion, the mineral engine for this area, and favourable stratigraphy in the Yerrada Basin sediments, carbonates, shales, that help the copper and gold in solution drop out in these areas and concentrate, making a giant deposit. Okay, why these ingredients are important. So this image down the bottom here, Oval South, these are the high gravity anomalies with coincident high EM as well. High gravity, high density, that's chargeable, so that looks like it's going to be sulfide mineralisation. Right next door, we've got a deep magnetic anomaly. This is the mineralisation engine, something that provides the heat, provides the mineralisation fluids to ascend to the surface. As I said before, favourable stratigraphy of the Yerrada Basin, carbonates, shales, as these fluids ascend, the mineralisation can get trapped at these levels. And the proximity of the crustal scale Ida fault, greater than 500 kilometres in extent, the ability to tap the mantle to allow metal-rich fluids to ascend to the surface, it's proven fertility, got deposits such as Mount Keith, Perseverance along its length. So that's why we think we've got a potential discovery to be made. And just on this, so this was originally defined by Rio Tinto back in the 1990s. They completed a Tempest electromagnetic survey here. They actually drilled it and terminated the hole at 232 metres. And that's the image of a 2010 VTEM survey that was completed here that can better see through the stratigraphy. And what that showed is that the conductor is actually at 300 metres and below the previously drilled Rio Tinto hole. So this represents a compelling target. We're in the process of completing the approvals for drilling, and we're looking to drill this early next year. Fairburn copper project. It's we identified 3 discrete bedrocked electromagnetic conductors here from a fixed loop survey. We completed some geological and surface mapping here, and what that data showed us, and what we interpreted from that data, is that we've got potential DeGrussa style copper VHMS style targets here. We're looking to drill these in March 2024. They're within 80 to 190 metres below surface. What we've got here in this blue here is some of the work that we did. So these are the map units. The blues are sediments. This green unit here is a mafic rock. We went and took some rock chips here, and they returned anomalous copper, anomalous gold as well. And some of these schematics that I've got here of DeGrussa, this is from Margie Hawk's work in 2016. What we think we've got here is a position outboard of a VHMS target that's buried at depth. So this is the conductor. This is what we've mapped here in the sediments. And this is what we think it represents within the VHMS system. Conductor at depth, and this is what we've mapped at surface. So a really compelling target here. Barwidgee Fault, this is located halfway between Jundee and Bronzewing, both multi-million ounce deposits in the Yandal Greenstone Belt. We conducted a 4-hole proof of concept drilling program. We were testing the Barwidgee Fault to test its fertility, and we returned some significant results here: 4 meters at 9, 7 at 1 from the one drill hole, and that confirmed the fertility of the Barwidgee Fault. Importantly, though, that these significant results, they're open up to 2 kilometres to the south and 650 metres to the north. Why is that the case? This here is a cross section of that one drill hole that we got. The mineralisation here is dipping steeply towards the west, which wasn't in any previous interpretation. Missed by the legacy RAB drill holes, and even missed by the 3 other holes that we completed in this area. So open up to 2 kilometres further to the south and to the north. And we're going to go and complete further drilling here early 2024. Firebird Gold Project, 30k southwest of Wiluna. This started off, we defined a 3 by 7 kilometre by 450 massive soil anomaly here. It's 2.5 k's west of Western Gold's multiple mineral resources, JORC compliant resources that they've reported. So that attests to the fertility of this particular Archean greenstone belt. We completed some air core drilling just to confirm the soil anomalism, and it showed that this anomalism was in situ. And our maiden RC program returned significant results, which we think has tested the fringes of a major mineralised system. Again, our results are open up to 2 k's with a very broad space drilling that we've got here. These are some of the results from the maiden RC program, the headliner being that 1 metre at 16 grams. But importantly, this is a zoom in of the soil anomalism here. The majority of the results came from the southern extent of the highest zone of soil anomalism, and in particular hole 8, which not only did they get that 1 metre at 16, but it actually hit multiple zones of mineralisation through it. So it looks like the structure potentially is horsetailing, and we think we've just scraped the edges of a major gold system. As you can see, it's open up to 2 kilometres, and we made an announcement yesterday that we're completing an air core program testing along this 2 kilometres of strike extent along the soil anomalism and infilling. We're going to drill 80 holes over 8,500 metres are going to be completed here, and we're going to have that completed by the end of December this year. Okay, just to round up why Great Western should be on everyone's shopping list. We've got large ground holding, over 5,000 square kilometres of highly prospective tenure in Western Australia. We've got really 4 prospective drill targets that we're either drilling or we're going to drill early next year. Firebird we've already started on. Year to the north, Oval and Oval South, I'm really excited about that. The Winu equivalent, we're looking for real giants there. Fairburn, DeGrussa style copper targets there from EM conductors identified there. And Barwidgee Fault, proof of concept drilling has been completed. We're going to go return and follow up on our significant results there. Got really supportive share register. Our board, management, cornerstone shareholders make up over 50% of our share registry. And low corporate overheads, we're committed to making a discovery. You know, we put greater than 70% of our funds into the ground. Our non-execs don't get paid. They're looking to leverage off any exploration success we may have. That rounds things up. For those of you that are good with booth numbers, we're on 15, so come down and I'd love to chat to you a bit more about Great Western. Thank you.
Thank you very much, Mr. Park. Yes, you were to the left of the coffee. When you grab your coffee, just go for a little wander down there. Our next presentation, our next company up on stage has had quite an interesting news flow. of late. In the last week or so, it's been quite concentrated. They've had headlines talking about, I've written them down, drilling results, intersects, lithium, nickel, spodumene, many headlines. Maximus Resources is up next for your consideration. It's an Australian mining company focused on exploration and development of high-quality gold, lithium and nickel projects in WA. Great location, not far from major infrastructure in Kambalda, so that makes it easy. Nice big tick. They recently had a nice little JV signed into Korea, which I'm sure our presenter Tim with us, who is their MD, will tell us about in a few moments. Tim is a highly experienced mine manager, had a lot of experience both here and also internationally, setting up and delivering several large projects from resource development right the way through to production internationally and here in Australia. Would you please make Tim very welcome to tell us all about Maximus Resources?
Thanks, Chrissy. Thanks, Chrissy, for the introduction. Morning, everyone. It's great to be here to talk about Maximus Resources. We're a relatively unknown story, and a lot has happened since we last presented. I like starting with this image. This is the image of the Wattle Dam gold mine, and in today's gold market produced over $800 million worth of gold over a very short 6-year period. And it's really a great example of the reason why we're all here today, because of the enormous wealth that can be created when we make one of these discoveries. So the presentation's been uploaded to the ASX. Read at your leisure then, or come and see us at our booth to discuss further. So our granted mining tenements, we're located 25 kilometres from Kambalda, and we're sitting on world-class geology. This region between Widjimutha and Kambalda has produced over 15 million ounces of gold and 1.4 million tonnes of nickel metal. And now this region is becoming quite a significant lithium region, with our tenements located between Mount Marion and the Pioneer Dome. Our projects are centred around the Wattle Dam Gold Project, was one of Australia's highest grade gold mines, and at the start of August we were really pleased to announce a 250% increase in our gold resources, growing our gold resources to over 320,000 ounces. At the end of the September quarter we had 2.5 in cash in the bank, plus access to $4.8 million worth of joint venture funding. So in October, 6 weeks ago, we announced a strategic partnership with the Korean government agency, KMEA, to earn 30% of our Lefroy project, which is one of our 2 lithium projects. So KMEA is responsible for the security of critical minerals supply into the Korean market, and this also extends down to developing overseas capacity to supply into that market. South Korea is a very important trade partner for Australia, the 4th largest, and is home to 3 of the 5 largest battery manufacturers in the world, and it produces 25% of the world's EV sales today, globally. Behind the KMEA joint venture sits LG Energy Solutions, 3rd largest battery producer, 2nd largest public company in South Korea. And they have a non-binding option to purchase KMEA's option, 30% interest into the joint venture at any time. This partnership is non-dilutive, is a significant partnership for Maximus, and we retain 70% for shareholders following a discovery. So Maximus's projects were located in one of the most prospective hard rock lithium projects regions in the world, and we've really been in the box seat of recent activity in this region. Due to the location and the geology, we've been receiving quite a large amount of inbound interest in our tenements. We have 2 projects, the Lefroy project, which is funded through the KMEA, and Larkinville project, which is surrounded by Mineral Resources joint venture with Marquee. Both of these projects have confirmed LCT pegmatites, an extensive swarm of pegmatites on those. And yesterday we were really excited to be able to confirm a spodumene-bearing lithium intersection 6 metres at our Lefroy project. So both of these lithium projects are on granted mining tenements. So across the Lefroy project, significant amount of outcropping pegmatites. They're all in the blue. Majority of these are highly fractionated with elevated pathfinders. The mapping of the 89 pegmatites shows a series of predictable stacked pegmatites, all dipping off to the southeast 15 to 30 degrees. And we are targeting a similar geological setting to Mount Marion, which is sitting on the same geological controlling structure, 16 kilometres to the north as Lefroy. So Lefroy has a small area of legacy soil mapping, and that's that red box up the top, and that's our initial drill target where we're drilling there today. Other than this small area, there's been very limited soil mapping, predominantly driven by gold and nickel focused exploration. So on execution of Khmer, the day that we executed, we commenced a tenement-wide soil mapping program, and 50% of that soil has been collected and currently sitting in the laboratory waiting for assays. The idea or the purpose, the aim of the soil mapping is to really deliver us some more additional drill targets. So now zooming into that red box, this is our drill target that we're currently drilling today. Legacy soil mapping shows the known outcropping and a strong correlation. The high lithium in soil shows strong correlation with the known pegmatites, which are in the white. Shortly after we executed this partnership with Khmer, whilst drilling a nickel target, we intersected a pegmatite, which is just south of this red box here, where we intersected 6 metres at 1%, 1.1%, including 3 metres at 2%. Two really important points about that intersection, other than it was not known, was one, it was a blind pegmatite, which has a very strong correlation to the soil, elevated lithium in soils up dip from that. And secondly, we've actually been able to confirm that this mineralisation interval was being completely mineralised by spodumene. This is important because it challenges the thought, the thinking about the pegmatites in this region. So currently we're near completion of this 3,000 metre drill program. It's 30 holes. It's a first pass drill program. It's targeting a 2 kilometre by 1 kilometre area, wide space, 200 metre by 200 metre program. So both the soil mapping and the RC program, we're utilising the non-refundable from Khmer. And this has been a really fantastic start for a lithium exploration program, which we commenced 6 weeks ago. So following these results from the soil and the RC, we are expecting to have a much larger drill program, exploration program in early 2024. So Maximus, we're in a very unique position. We have a robust gold resource, over 320,000 ounces, and that really underpins our current market cap of $14 million. Our focus is not to stop at the 320,000 ounces, but to grow to 500,000 and beyond. And we've got strong conviction that we'll be able to do it, since we've increased our gold resources by 300% since 2021. Our gold projects are centred around the Wattle Dam Gold Project, where there's existing infrastructure and quite shallow gold resources there. In the background, we've been working on some near-term production opportunities. And with gold price nearly $3,000 an ounce, it makes toll treating very attractive to protect shareholders' value. But the real prize for us is to find this repetition of the Wattle Dam gold mine. As mentioned, it was one of Australia's highest grade gold mines, 15 gram underground dirt. And it's been our recent theory that this high grade lode was terminated by the east dipping shear zone. And potentially giving offset for mineralisation to be on the western side, which has never been drill tested. So to test this theory, we drilled 3 deeper holes on the western side. So the success of the drill program for us is one that we confirm that there has been a structural offset of this geology, being identical to what we see at Wattle Dam. And secondly, we saw intense zones of biotite alteration, again, identical to what we see in Wattle Dam high-grade lode. We see very strong arsenic and quite a broad zone of gold mineralisation, elevated gold mineralisation. So this has been very, very exciting front for us. A lot of work has been gone into drilling these 3 holes. But if we've been able to prove this, if we're able to prove this theory correct, it'll be a completely game changer for the company. So in August, we announced a 250% increase in our Wattle Dam gold mine gold project. And what we wanted to show from this MRE is what we've always believed, is that we're sitting on a much larger gold mineralised system, and shows a significant amount of upside exploration remains, but also provides a baseload for any future production. So I like showing this image. This is shows the extent of the mineralisation across the Wattle Dam gold mine, and the resource is only limited by drilling. And I like showing it because you can see the clear repetition of these gold mineralisation zones. Note the mineralisation that is sitting outside the current resource, and we've been able to confirm mineralisation to 500 metres below surface. So we've confirmed that this is a very, very fertile area. So to put it in perspective, what Wattle Dam gold project has, sitting to the 2 kilometres to the east is Astral Resources with 1.25 million ounces, showing a very similar strike to what is our Wattle Dam, and again, it's limited by drilling only. So regionally, we have 117 square kilometres of gold rights, gold tenements, and this image to the right shows gold in soil over a 20-kilometre strike. And as we've been building our geological model, we can see a really strong correlation between the porphyry contact and the gold mineralisation. And this is advantageous for us when we're designing our future drill programs. So a significant tract of land remains for us unexplored, and noting that this soil mapping that we're completing for the lithium is also benefiting our gold and nickel exploration programs. So today, the company has a market cap of 14 million, 320 million shares on issue. This gives an EV of the company of $38 an ounce. This doesn't have any valuation on our lithium joint venture or our genuine nickel targets and opportunities we have. Beacon Minerals are our largest shareholder, and their Geordie gold processing plant is 80 kilometres up the highway in Coolgardie. So Maximus, we're a small but very dynamic team. Over the last 2.5 years, we've drilled 36,000 metres, and we've shown and we've demonstrated a strong ability for responsible capital allocation, with 82% of our capital being put into the ground. And we have not raised since August 2021. So in summary, we've got a very, very powerful strategic partner with Khmer and LG Energy Solutions, a systematic lithium program underway, and it's already starting to deliver some results, and with a much larger program to be commencing in 2024. The company has several gold resources to leverage off, and multiple toll treating options available for us. And we're really looking forward to starting that second campaign at Wattle Dam to continue our search for the potential offset of the Wattle Dam gold mine. So thank you very much. Feel free to add MXR to your watch lists, and come and see us at our booth to discuss more with our gold, lithium or nickel opportunities. Thank you very much.
Thank you, Timothy. You're very good with your timing. Well done. Well done. All right, Bulletin Resources, next up, a well-funded lithium and gold explorer. Their flagship Ravensthorpe lithium project is located only 12 kilometres from the operating Mount Catlin lithium mine in Western Australia's southwest, a bit of nearacity. Outcropping high-grade pegmatites along a 4-kilometre trend demonstrate the prospectivity of the area, and drilling is planned to commence early next year, which is not that far away. This is Bulletin CEO, Mark Csar. Mark, welcome to you, sir. He is a very passionate geo, and he's here to update us on this exciting project. Would you please welcome Mark to the podium, everyone?
Thanks, Chrissy. Yes, we're certainly looking forward to our drill approvals next year, or drilling next year, I should say. Thanks for attending today. We're just outside the booth as well. Please come and have a chat to us. We're happy to talk about our project and what we're doing coming forward. For those who are not familiar with Bulletin, just a quick snapshot of what we're at. We're well funded with nearly $12 million in receivables in the bank. a shareholding of 290 odd million shares, which puts the market cap of roughly about $50 million in today's speaking. Very strong board holding in the company. And we've also got a lot more experience. We've brought on Paul Polly's the chairman. He's as a lithium play in Thailand, so he's getting very familiar with the lepidolite scene. And we've also, and Mr. Keith Muller's in the room here today with us. Keith was the operations manager at Mount Cattlin Lithium Mine, and I'll be talking throughout the day since we're so close to it. Plenty of experience in there, and we're certainly looking forward to what we've got coming up with us. Ravensthorpe Lithium Project. This is our flagship project. We believe it's one of Western Australia's most prospective spodumene lithium projects. And the reason for that is just multiple things. Where we are, we're just 12 kilometres down the road from the Mount Cattlin Lithium Mine. We're in the same geological sequence at Mount Cattlin. The processing plant there, sorry, put it down. Thank you, there you go. I didn't think I was too tall, must be too short. I'll grow one day. Mount Cattlin, existing mine, it's got a number of years still to come with there. What we see on the ground suggests very strong mineralisation at depth. We're seeing good amounts of high-grade spodumene. It's very coarse. And what we've seen with our early metallurgical work, that it's giving pretty good grades, very similar to Mount Cattlin, good recoveries, and it's a nice, clean product. And we've got lots of pegmatites on the ground as well. We've got three main lithium trends, or three main pegmatite trends at Ravensthorpe, and our main focus has been the eastern pegmatite trend. It's a trend that's got spodumene very much to the south, with nice coarse spodumene, which gives us really good grades. It's over 4 kilometres in length, with over 100 pegmatites to date. And in the southern part of the area, if I get this right, just in here, is where we're seeing significant amounts of spodumene on surface there, with grades up to 7% lithium. I'll just focus in on that southern area on the next slide here. It's an area we're calling the big pegmatite. It's basically a swarm of pegmatites, roughly 500 by 700 metres in area. And within that group, there's about 40 stacked pegmatites. The only lithium mineralisation we've seen in that area is spodumene. We're not seeing any lepidolite at all. The pegmatites themselves are up to 200 metres in length. We think they may go longer. Under the surface there, our crop's not very good. It's pretty flat lying in the area, and the topography matches the surface of the pegmatites to a large degree. From what we can see in our surface mapping, the pegmatites can be up to 10 metres thick, and they do pinch and swell, so they become smaller and larger as they go along strike. And they're very gently dipping to the left-hand side of the screen, or into our tenement to the left there. And just to note there, of the tenement boundary there, Allchem is the tenement just to the right of us. But everything's open to the west and southwest into our tenement boundary. What we're also seeing where we don't see lithium minerals because the pegmatites are so flat, we're looking at the mineralisation of the pegmatites themselves. And there are various ratios that are out there in literature to use to suggest whether you've got mineral-bearing pegmatites in there. And I've just shown one of our ones in here, the potassium-rubidium ratio. It's used to determine how fractionated or how well developed the pegmatites are, how well the minerals have split from the parental melt. So the greater the fractionation, or the lower the potassium-rubidium ratio, the more likelihood there is that the pegmatites are mineralised. And this just supports what we see with the spodumene. We see in spodumene surface, but also the microclines or the wall rocks of the pegmatites are also just suggesting at depth that we're going to have mineralisation. It just provides a good strong story for us that we're expecting to see mineralisation at depth. So we're pretty keen to be drilling in that area. Just some examples of how coarse the spodumene is in the area. We're seeing specimens up to 30 centimetres in length. At our booth, we've got some specimens here as well. Please come and have a look at them. It does provide for a very good product for us. Earlier in the year, we grabbed 100 kilos of pegmatite, put it through a test work flotation plant with BHM. The reason we chose BHM is some of their mets used to work for Mount Cattlin lithium mine, so the processing we used was very similar to what Mount Cattlin has. What it shows is our pegmatites treat very similarly to the Mount Cattlin pegmatite system, which is not surprising given we're in the same geological setting. Getting good concentrate grades of greater than 6%, good recoveries, very similar to the plant at Mount Cattlin, and very importantly, we're also seeing very low iron, which is important for getting a better price of a product. Our work was only preliminary, and we're expecting with further work that our outcomes will achieve, we'll get better recovery grades and make a cleaner product. So what are we hoping to drill when we're drilling? We're using Mount Cattlin as our exploration model. Mount Cattlin currently has 8 million tonnes of material left in the reserves, which equates to about a 4 to 5 year mine life. So 27, 28 is when they're expecting to finish mining. Their pegmatites, that's shown in pink here on the slide, spodumene bearing. They have lepidolite to the northeast, as do we. They're very flat to dipping. They're numerous. There's multiple pegmatites. It's not just one pegmatite. They're stacked on top of each other, and they pinch and swell. They have variable thickness between 2 and 22 metres. So this is what we're hoping to see as our model going forward. Rather than one solid pegmatite, we're expecting to see a series of pegmatites as we drill down into depth. For those out there, we've had a bit of a pathway to getting our approvals for drilling. We're anticipating drilling early next year. Earlier this year, our project was referred back to the EPA, the Environmental Protection Authority, to assess whether our project will be assessed at a higher level. EPA reviewed what we were doing, and they decided not to assess our project and referred us back to the normal pathway with Department of Mines. So that was last month. The Department of Mines are now progressing with our native vegetation clearing permit, and we're expecting our permits for that to come through shortly. We realise where we are is an area that's not too far from town, and we have vegetation in the area. We believe we've got a good project here, so we're making sure whatever we're doing is we're doing it properly and thoroughly and responsibly going forward. We're here for the long-term play, not just this drilling program. We're looking going forward. So we're making sure we're doing everything correctly and not just talking about being ESG aware, but looking at our environment and our social responsibility and making sure we're setting ourselves up right for the longer term. We've had surveys conducted with flora and fauna and heritage. All those surveys suggested we're having minimal impact, and that's certainly helping us with our approval process. Just some examples of what we're doing while we're waiting for our programs to come through. We're planning low impact drilling, and what we're meaning by that is we're using a small track mounted rig as an initial instance there. We've already started preparatory works for this drilling program. I mentioned we completed our environment and heritage surveys. They're both coming along. They've both come out with very good outcomes for us. We've just very recently, we started marking out the track, surveying the track so we know where we're going, using cleared areas where possible to reduce our impact to the environment. And we're also locating drill pads on large areas where there's been clearing before. This area is not totally native vegetation. There has been some forestry work done in the area and taking advantage of that to reduce our footprint. So hopefully early in the next year, we'll be out there drilling, and we're looking forward to seeing our results. As well as that initial drill program, we do have a wider program going forward. The western trend is about a couple of kilometres away from the eastern trend. It's largely dominated by lepidolite. Grades up to 4.5% lithium, but largely lepidolite dominated. We recently did some work to the south. We have seen some spodumene outcrop, and we're getting it's about 100 metre long outcrop in there. To the south of us is Allcem's ground. That outcrop is in on our ground, but we'll have to follow that up. But at this stage, we're still looking at the larger target, the larger tonnage target at the eastern pegmatite trend. Again, just some examples of lepidolite and some spodumene of the western trend. It's not as coarse-grained as the eastern trend. It's certainly great that there's some there, but we're certainly focusing on the end product, especially with the Mount Cattlin processing plant just down the road. We do have a third trend. It seems to be smaller and less fractionated pegmatites, which suggests to us that the better pegmatites are to the east. But we'll still keep on searching in the area and seeing what else we can find in terms of pegmatites. So that's our lithium story. We do have a gold project as well, Lake Rebecca Gold Project, for those who are familiar with us. It's 150 kilometres east of Kalgoorlie. There's been quite a bit of corporate interest in the area just recently. Maximus Resources now have 2 plus 1 million ounce deposits in the area, Rebecca and Lake Roe. Our Lake Rebecca tenement is right on the boundary of the Rebecca deposit. The Rebecca deposit on this map, this is the Rebecca deposit just here. Our ground extends along strike of that area. Drilling in our area shows similar grades to what the Rebecca deposit has, and we've still got some open ground to the north. But we also have quite a large land package in there. It's about 500 square kilometres. And we have over to the east, we have some other areas of air core drilling which show up to 7 kilometre length of strike length of anomalous gold in the regolith. They still need to be followed up. But our focus for sure, and without doubt for us, is our Ravensthorpe project. The Chifley Gold project for us is also in the same area. It's on the Claypan fault zone, which is on the same structure as the Lake Roe deposit. In that area there, we've conducted soils, and we have a coincident gold and copper anomaly, which we're still doing some further work on, but we're ready to start drilling that once we've got a clear plan of where we want to go. And lastly, our Mount Farmer project. We picked this ground up earlier last year. We've had our first 2 tenants granted. We initially picked it up as a gold play. The Dalgaranga gold mine is just to the south of us. But more recently, Krakatoa has been drilling some pegmatites in the area, and they've got some interesting results in there with rock chips up to 4% lithium. They've recently drilled pegmatites up to 30% thickness. Our area in there is just a bit off to the main pegmatite area. The main pegmatites is still yet to be granted, but we're still starting to do some work on the granted tenement areas. So that's us in a summary. We're in early stage exposure to lithium. They're just down the road, as I mentioned, from Mount Catherine, so good infrastructure in the area. We're in a strong financial position in there with 12 million in cash. And we're always looking to develop things environmentally and responsibly, and looking at the long term. So please, again, feel free to see us at the booth there, and thanks for your time.
Thank you very much, Mark. I was making no aspersions about our height at all. It's just that, and if any of the presenters come up and I don't do my job as your MC very well, just adjust those microphones so they're pointing straight at your mouth so we can record everything properly and we don't have that horrible feedback. Right, Graeme, Sloan, come up here. Are you tired? You buggered? Yeah, I thought you'd be buggered. Back in May, we were talking all about the upcoming IPO for this mob. There's a lot of work being done. A couple of weeks ago, it was all over the news, the IPO is coming up, and then 2 days after it opened, you'd reached the magical $15 million that you were after. It's still going, so he's a happy fellow. All right, let's hear from Graeme. So he is the Managing Director of Kali Metals, and Kali is the owner of one of the largest and most prospective exploration portfolios across Australia's world-leading hard rock lithium fields. And obviously, a number of people thought so in the last few weeks and have jumped on board. Should we jump on board? Let's make him welcome and find out.
Thank you, Christy, and thank you, ladies and gentlemen. It's an absolute pleasure to be here. It's, as you said, Kali Metals is a new IPO. And boy, what a ride we've had in the last few weeks. A real roller coaster of events, plenty of highs and lows along the way just to get to this very point. Before I tell you a little bit more about it and get into the detail around the presentation, let me tell you a little bit about the formation of Kali Metals. It was established from the spin out of the lithium assets of ASX listed company Kalamazoo and also TSX listed company Crabb Resources, you might know as a Canadian gold mine. The journey started some early this year, and we'll look to now list, depending on the ASX timetables, but we'll look to list on the 5th of January, early next year. The IPO offer opened and closed, I'm extremely pleased to say, in a couple of hours, heavily oversubscribed, allowed us to raise the maximum subscription of $15 million at 25 cents. 6 months ago, if you had to ask me, was this the right timing to launch an IPO, I probably would have agreed with you and said no. But I suppose this just goes back to show that you have the assets, then I think you'll get the interest no matter what time of the year it is for the listing. So just on before I go into more detail on the presentation, the obligatory disclaimer, urge you to read. I'm sure there's some forward-looking statements in here somewhere. It's up to you to find them. What makes Kali Metals stand out from all the others? Why the investment? Why is people such a compelling investment opportunity for them? Well, we start with a massive land package. We have close to 4,000 square kilometres of tenements based in 3 areas: to the north, in the Pilbara, to the south, in Higginsville around Eastern Goldfields, and then over in the new emerging province over in Eastern Australia. So we have these massive land package. We have a very strong and strategic partnership with SQM. SQM have the right to earn into 70% of 2 of our 3 projects up in the Pilbara. They can spend some $12 million over 4 years to earn that 70%. Currently, they've spent around 2.25 or thereabouts, and they've earned the right to 30% of those 2 projects. And I'll talk a little bit more about those as we go further on. Throughout that area, nearly 4,000 square kilometres, we have multiple targets. And again, I know we hear this all the time, but I'm telling you, we just see this so often with such a large area. We're blessed with a number of targets, exploration targets, highly advanced targets. And those areas that we have got, especially in Western Australia, surrounded or adjacent to world-class lithium mines and lithium prospects. And importantly, we have the team, starting with a highly accomplished board, very experienced, covers all aspects of the mining phases, if you like, from exploration right through to construction, development, operations, and of course, corporate M&A. More recently, I'm very pleased to announce that we've added a highly experienced lithium executive to our team in Stuart Peterson. Stuart comes from us from Global Lithium, where he is a general manager of geology over there, and rightly, I think, credited with a lot of the responsibility for discovering and developing the Mana prospect up there. So Stuart will bring an enormous amount of lithium experience into the team. And then the funding. As I said, the funding was oversubscribed a number of times, multiple times. We were extremely fortunate to close within a couple of hours. We'll look, as I said, to list onto the ASX in the 5th of January. At the end of that, we'll have that 15 million of cash. We'll have something in the order of 144 million shares out, a market cap of around 36 million, and a enterprise value of 21 million. So the good thing is that our 2 major shareholders, which put these lithium assets together in Kalamazoo and Karora, will still have big percentage, big ownerships. Between them, they'll own somewhere in around 40% of the new Kali Metals, which gives us a good protection mechanism for any sort of other activity outside of our control. Our projects themselves, well, let me start with Higginsville, if you like. Again, a vast area. You can see up there the slide. The tenements extend north-south by about 100 kilometres, east-west up to 50 kilometres wide, and dead smack in the middle of a number of operating lithium mines and well-advanced lithium exploration prospects. If you go to the north up there, the top of that page, you'll see Mount Marion. Across to the east is Bald Hill. Both of those are operating mines, as most of you would know. And north of Bald Hill, you'll see Mana up there. That's the new Mana. As I said, that's where Stuart came from. Down south, you have Buldania with Liontown. Norseman area down there, you might know in the press recently, MinRes just completed a deal with Pantoro to acquire 100% of their lithium assets. And then Pioneer Dome as a game with essential metals out there and develop. And we're smack in the middle of that with such a big land tenure package. We definitely know there's sort of LCT pegmatites on there. Our early work to date has shown not just the LCTs, but spodumene and rock chip samples. We inherited a massive database from Karora when we picked up these tenements, or these lithium rights, I should say. Some 12,000 occurrence of a pegmatite in the database. 750 of those are greater than 10 metres, and the deepest being, or sorry, the longest being around 169 metres. All of that, along with our field work, the mapping, the field work, the rock chips, the database, will form the basis of our planned drill program, which we are hoping, and with all the caveats around with approvals and so on, that we would be drilling sometime in Q1 of next year. And again, with the same and probably more caveats put around that, if everything works out, we'd aim to put some sort of resource out mid next year, if that was at all possible. So a big area, a great location, surrounded by the right infrastructure up and down that whole area, as we've said and seen that, and operating mines in the area. Our second major project, as I said, is up in the Pilbara. The Pilbara consists of the Doms Hill you see up the top of that photo, or the top of that plan there. To the right of that is Pear Creek, and then to the right of that again, down the bottom right-hand corner, is Marble Bar. Both Doms Hill and Marble Bar are the subject to the SQM JV, and as I said, without going through too much, is that they have the right to earn 70% into those by expending 12 million over 4 years. Pear Creek, we will look to explore and fund ourselves. So all the money that comes from the IPO, the majority will go into Higginsville, and our other tenements over east will get some, as well as a small amount for Pear Creek over the next 2 years. Doms Hill we like because of the geological, what we see as a geological analogue to Pilbara Minerals Pilgangora, and as you can see there, some over 300 million tonnes at 1.1%, and that's about 50 kilometres southwest of Doms Hill. Further 20 k's down to there is the Wodgina mine with 260 odd million tonnes at 1.2%, and just to the west of Doms Hill you'll see that Tabba, the new Tabba Wildcat. You couldn't ask for a better result for that company. I'd love to see people get out there and really kick some goals. They certainly have. Their market cap has gone from millions to $1 billion. So well done to them. Hopefully some of that will rub off to us onto Doms Hill there. We just completed a second phase of drilling at Doms Hill, right down the bottom of that area, of that top area you see there. About 6,000 metres, a geochem drill program, so we expect then the PPB results, more so a targeting exercise than to see anything else to come out of it. So we'll follow up with some deeper RC based around that drilling. Marble Bar, lots of field work, rock chip samples. We've identified a number of LCT outcropping pegmatites. One in particular goes for just over 1 kilometre long, 1.1 kilometre. And the 4 lots of rock chips along that way have delivered grades of 2 to 2.8%. So early days there, lots of work, but hell of a lot of potential to come out there. And when you look around the Australia or West Australia and you see the sort of the size of the deposits at in and around this, the Pilbara region really is the sort of the Valley of the Giants, if you like. It produces the bigger number of deposits. And I'm not saying that down south they're not going to be the same over time, but certainly these are looking a much bigger size, and another reason why ourselves and SQM are up in this area. Our third area, if you like, is over in the Lachlan Fold Belt. Now, this is a new province. This is something new come out, quite frankly, on the back of the very good work that Kalamazoo did. They picked up a lot of tenements over there, and it's new. And we've been fortunate. The field work we've seen there have discovered, and rock chip samples have seen LCT pegmatite, spodumene, seen everything we really wanted to do to see over there, and it's certainly given us enough confidence to go forward and put some money into that and see what we can get out of that. If that comes off, then I'm saying that this is as we're in a prime position. We've picked up most of the ground that sits around the lowland areas, and it's a big tenement position. It's some 2,000 square kilometres of tenements up and down both those. I will tell you that all the non-geologists, and I'm sure Stuart's going to sort of pat me on the back for this, but when you look at the Jingellic project up there, there's an area called the Great Pegmatite. No, sorry, the Giant Pegmatite. I've got to say, that's got to be a start for where we'd go and have a look for some lithium. So that's on the cards. There's plenty happening over there. As I said, it's really exciting times, and I can't wait to get some people on the ground. So how can I finish? Well, in conclusion, this is a company that's got, as I said, a massive amount of tenements. We believe makes it one of the largest hard rock lithium tenement packages in Australia, if not globally. And we have those 100% to those. We have the team, we have the board, we have the funds, we have these multiple very real targets to go out and drill, which we can't wait to do. As soon as that listing is and the money hits the hands, we'll be out there spending it in the ground, and we'll put close to 75% of those funds into the ground, and that's what we should be doing for all shareholders. So that's it. But before I finish, let me say, can I thank a few people? And again, certainly the boards, and I won't drag on too long, I promise you, but certainly the boards of Kalamazoo and Karora, I think it's for them to show the foresight to do this sort of delisting of their lithium assets into Kali is really well done. The Kali team itself, only small, geez, they work hard. They've done a tremendous job, and I really thank them. The JLMs who put the raising together, again, great job. Bell Potter, Canaccord, couldn't ask for a better two groups. Grant Samuel, our advisors, Gilbert and Toma Legal, and NWR. And a little special thanks for Karora's legal team over there, headed up by Laura Noonan Crow. So thank you all. We wouldn't be here making this presentation if it wasn't for that great work. Thank you very much.
Congratulations, Graeme. No wonder you're tired. Really well done. You're going to stay for drinks this afternoon, or are you going home?
No, I'll definitely stay for drinks. I need a drink after that.
Okay, good on you. Deserve it. Well done. So we're going to go from one very happy MD to one very happy CEO off the back of results from recent drilling recently. So they've been powering forward in the last few weeks. So a lot of you just joined us in the room up the back. Do you want to come and take a seat down the front and get closer to the action? You're more than welcome. Lots of positive news flow. Time to explore the potential of TG Metals. So they're a lithium and nickel-focused exploration company with extensive tenement holdings at the premier Lake Johnston project in southern WA. This is David Selfe. He is their CEO, and there are a lot of people who have just joined us in this room to hear what you have to say, David. So welcome. Would you please make David welcome, everyone?
Thanks, Chrissy, and thanks for RIU for finding us a slot and sort of late in the piece. And welcome to everyone today for coming along. So TG Metals, I mean, we started our life out as the tethered goat, unlisted, many years ago. And we listed in May of 2022, where we raised $6 million. And our initial focus was on nickel. However, today I'm here to talk about our new lithium discovery. And in terms of resurgence, the theme of this conference, if TG Metals hasn't had a resurgence, then I don't know what has. Okay, so this is what got us excited to start with. So our initial drilling on our lithium anomaly turned up with spodumene pegmatite straight away, and we passed the UV light over it, and it lit up like a Christmas tree. So we were very pleased with that, but not being satisfied with that, we wanted to make sure that we did have spodumene in our pegmatite. So we ran a Raman scan over it, and it came up with very pure looking spodumene. And then it was a nervous wait, waiting for the assays to come in, and we even got a better surprise when we got basically high grade throughout the whole of the pegmatites, 8 to 9 meters in width, and the odd 2% are in there as well, which is always good. Usual disclaimer, encourage you to read it. This is on the ASX, posted today. Okay, so where are we? Well, we're in Lake Johnson project, down in Lake Johnson Greenstone Belt. It sits between the Forestania, Southern Cross Greenstone Belt, and the Norseman-Wiluna Belt, both of which of those have been more known for pegmatite discoveries, lithium, over the past years. So we're onto a new one, and we have over 50 kilometres of greenstone and covered by our tenements. A reasonably large area of tenements, 356 square kilometres, and growing because we've got some tenement applications as well, which we picked up earlier on prior to this lithium discovery. And it's a rather unexplored region previously for LCT pegmatites. Charger has the Medcalf discovery out to the east of us, and there's some pegmatites to the north of us at Mount Day as well, but nothing really with the grade and the potential size of what we've got. So just looking at our corporate overview, you can see the share price performance graph there over the past month. So I mean, we really have had a resurgence. And the high volume there on the first day of discovery release on the 30th of October. We're sitting at around about 50 million market cap. As I said before, we raised 6 million on the IPO. We've been 18 months now. We've been using our funds prudently, and we still had half of that, more than half of that still in the bank as at the 30th of September. We're currently doing drilling programs now, so the spend is increasing, but we still have enough funds going forward to complete our planned drilling programs. And everyone who has options at the moment is pretty happy because they're all on the money. And also in our major shareholders, of which Stewie and Jaxon figure prominently down here in the front, they still hold, top 50 still holds 62% of our shareholding, so they've stuck with us, and we hope they'll stick with us for a lot longer. So on the board and management, we've got Richard Bevan there as the non-exec chairman. Previously, he was managing director of Cassini, and he's also non-exec of Kili and Naria, and has recently joined the board of Elmore as well. There's Brett Smith, who is the geology brains trust behind putting the tenements together for the Lake Johnson project, initially with Stewie, and there's Gloria as well, representing some of Stewie's stake as well on the board, and as well as bringing a lot of international business experience to the board, and myself, who I've got a background in all sorts of commodities, a lot in nickel, but also a fair bit in lithium as well, and some iron ore and some gold experience as well. So Lake Johnson, where are we? So there we are, down in the southern end of the Lake Johnson Greenstone Belt. Our Burmeister lithium discovery sits out there on the western side of the Greenstone Belt, right up against the Western Granite. When I say right up against, we've still got 2.5 kilometres of basalt before we get to the granites. And our closest analogy to where we would sit is the Earl Grey deposit there over in the Southern Cross greenstone belt. It's a similar geometry, flat lying around about 15 degrees, and is up against the granite and in a large basalt flow as well, which is what we've got. You can also see it to the east there, the Calf lithium deposit, and Mount Day pegmatite swarm to the north. Is in close proximity to us as well is Poseidon's Emily Ann and Maggie Hayes nickel, past producing nickel mines. There's a camp there, and they've kindly let us use that for some of our housing and some of our exploration staff. We have a large area to the south of us which is pretty much unexplored for lithium. These tenements in 2019 were actually vacant, and when they were picked up by the tethered goat, and there wasn't a lot of lithium exploration that was done previously. So when we took these on, and after listing, we had to start from scratch. So how do we hone in on our lithium discovery? So basically the whole western side of the greenstone belt in the southern area there, where it does fatten up, was identified early on as a potential Goldilocks zone. Probably heard that term bandied around a lot before, but it was a large area. We had to narrow that down so that we could find a reasonable area to go and drill. So we did a large soil sampling program early on after listing, and we defined a 100 ppm soil anomaly, and that anomaly was then was basically picked out due to some subtle structural features which were coming in off the granite off there to the west, and the most prospective host rock for pegmatite is within the basalt. So we've got a large basalt area there in green off there to the west, and what we then did was initial 6-hole drill program, which was conducted earlier on this year, and we hit the pegmatite straight away. The targeting for that was basically on the strongest tenor of soil anomaly that we had, spaced 200 meters apart along strike and 100 meters down dip, and we came up with the high grade numbers basically throughout the whole of the pegmatite. The soil anomaly itself is very large. It's 4.5 kilometres by 1.7 kilometres. Where we're seeing the highest grades in that soil anomaly is where we're also projecting the daylighting out of the pegmatites. So this is turning out to be a great pointer for our exploration. There are no outcropping pegmatites in the area, so this was totally blind. As far as we know, it's the only totally blind lithium pegmatite deposit to have been discovered in Australia, at least. I'm not sure about the rest of the world. So just zooming in again and giving a better overview of our lithium results that we got out of our first drilling program. So 5 of the 6 drill holes hit pegmatite, and 4 of those hit high grade pegmatite. The other hole that was drilled was basically in oxidized, is too high up. So it was oxidized and the lithium had been leached out. But the weathering profile here is not that deep anyway. It's about 25 meters. So compared to some other places where it can get up to 80 meters thick, we're in a pretty fortunate position on this western side. The blue lines there is what we have approved for drilling in our POW. And so we have a lot of space there to go and drill. So we're currently drilling our phase 2 program, which is going to be testing up dip, down dip, and along strike from our initial hits. There's also testing further to the north, where we've got some high plus 100 ppm soil results, and also on the western side, which is a long anomaly and fairly consistent all the way through. And we're hoping that at this stage is another pegmatite which is stratigraphically higher up in the than the two that we've currently drilled. So moving on to the cross sections, you can see there where we've intercepted the pegmatite. Hole 9, which is in the cross section to the top there on the left hand side, that's had a diamond drill extension put on it. That was to give us some orientation of the pegmatite as well as information, as well as some information on the crystal size of the spodumene. So that was successfully conducted, and that's in getting cut and sampled as we speak. And on the southern, the lower section there, that hit the upper pegmatite. We didn't drill far enough to get to the lower pegmatite. So we're going to extend those with RC basically re-entering the holes on those. But the pegmatites are strong. They're quite consistent in width, and the spodumene is very consistent within the pegmatites. Our second round of drilling, which we're currently doing, is going to probe a lot deeper than this 120 to 132 metres that we've currently drilled. We're going down to around 300 metres. If it holds true to what we're seeing so far, we should be getting pegmatites about 100 metres vertical, 90 to 100 metres vertically, space between, and they should continue as we get further towards the centre of the stress field at deeper depths. This is all stuff that we've got to work out with our phase 2 drilling program. Where's the centre of the stress field? Where's the best place to target bigger pegmatites at depth? And also, what's the upside as well in extensions? So we're pretty much open to the north and to the south. There's a lot of soil sampling further to be done. Now that we know where to look, we can target those areas a lot better. So we're now targeting where we've got bulges out in the greenstone belt to the south, with further extensive areas of basalt. We've also got new soil sampling out to the east. So which was originally came about because we extended some lines out to the tenement boundary out to the east, and we came up with some more 100 ppm anomalies. They're a lot larger than the ones that we had at Burmeister. We believe that's to do with some structural and weathering effects as well, but they also line up quite nicely with the known structures that we have in the area as well. So our hope at this stage is that we're also seeing these as being daylight zones on surface for pegmatites lying below. Our phase 2 program, 4,000 metres of RC, about 13 holes, will flow into phase 3 of that. So phase 2 is not where we're stopping. That'll take us through to about the end of February into March next year. And then we'll have the phase 3 underway. Phase 3 will basically carry on from the phase 2 drilling there, which is in the grey stars, and testing pegmatites up dip, down dip, and the long strike. We're also putting in our approvals, starting our approvals process for drilling on the Jägermeister lithium prospect out to the east, and we're getting some expert advice on better targeting through our soil anomalies as well. So that's just a picture there of our drill rigs in action. So there's a diamond drill rig and our RC rig going out to site before they started drilling. We have ongoing drilling programs. Raglan Drilling are doing our drilling out there for us. They're a fantastic mob, been very kind to us in keeping their rigs out on site. Even the diamond drill rigs parked up while we're waiting to see what we want to extend. So at TG Metals, we believe our exploration results will drive a shareholder value. This is a resurgence for Lake Johnson. I mean, we've got now, as early as yesterday, Rio Tinto coming into the area now, doing a joint venture with Charger on their tenements. They've obviously see the potential in the area, and so do we. How we got here to this stage was through systematic analysis of the data. We're not going out and willy-nilly putting in drill holes everywhere and just hoping for the best. We're using science to get where we are, and we continue to do that. So that's our philosophy going forward. We're now concentrating on our lithium. We do have nickel targets as well, but they're taking a bit of a backseat because the lithium is looking like a far more exciting play at this stage. We're moving ahead with our flora and fauna surveys and heritage surveys that we need to complete to expand our exploration efforts, and we are in the fortunate position of having multiple commodities in the one location. So if you haven't before, I urge you to have a look at TG Metals for something. We've got a lot of news flow coming up with drilling programs and a lot of exciting targets to test yet. Thanks.
Congratulations, David Selfe. Well done, buddy. If I only spoke to you a month or so ago, I'd have been in a much happier position right now. But I'm going to be happy with Stewie's pies out there in a few moments. That's the main thing. Hey, team, coming up after this break, we are going yellow. So we've got 2 sessions of uranium. We're finishing it all up with a panel session at the very end as well. So you're more than welcome to write down your questions and we'll get them into our panel. We've got 40 minutes